Well, welcome once again, everyone, and again, thank you for joining today's discussion on managing spreadsheet risk for CECL. My name is Joe Galletta. I'm a sales manager with ClusterSeven. I'm joined this afternoon by Graham McCrae, Director of Marketing for ClusterSeven, and Jeremy Tondi, VP of Americas. I will be your host and moderator today, and we'll start by quickly going through today's agenda. First, we want to talk about the opportunity that the new CECL auditing requirements represent to you as partners and really banks in general. We'll next go through a brief overview of CECL and what the requirements entail. We'll then next talk about the ClusterSeven Solution and how we can help address some of these CECL audit requirements, and then move into talking specifically about partner opportunities that exist to help companies satisfy these requirements while partnering with ClusterSeven and leveraging our solutions around Excel. And finally, we'll wrap up with a question and answer session. So with that, I'm going to turn the microphone over to Graham McCrae, who will give you a brief overview of the opportunity that CECL represents to you.
Joe, thank you so much. Yeah, hello, it's Graham McCrae here, based in London. I think everyone's heard a great deal about CECL. I think what I'd like to do in this session is perhaps give it some context, give it some shape, hopefully broaden people's understanding of what the challenges are, what the opportunities are, and how the market is responding to it. Interestingly, the American Bankers Association see this as a significant development in accounting for US banks, whilst other areas of the US regulatory space for financial services are perhaps in a state of flux. Certainly the accounting piece goes from strength to strength. And the development in CECL kind of mirrors the development in Europe around IFRS 9. So I think the first thing to recognize is that we believe that CECL will impact over 6,000 US lending institutions. That's from the tier one institutions, the Goldman Sachs and JP Morgans of this world, all the way down to the savings and loans, the community banks. Pretty much any institution in the US that lends will be affected by CECL. And that may well extend to the lending arms of in some of the industrial or consumer businesses in the US. It remains to be seen. Now, the idea behind CECL is that it's a new way for institutions to account for their loan losses over the lifetime of a loan. And the key issue here is they have to in essence, show that the calculations that they are using are valid, are relevant, are accurate, and are fully auditable. And these results will be presented back to the shareholders in the annual report, but also regulators will be looking very closely at the results as well, even though it isn't actually a regulatory issue. Now, for many institutions, Excel is going to be a tool that is used either as part of the planning, part of the implementation of CECL. And this may well relate to its calculations, it may well relate to its reports, it also may well relate to the data sources as well. But the crucial thing that institutions must be aware of is there needs to be an audit trail of the changes. And they're going to be able to recreate the results so that if a regulator, an auditor, or the senior management come in and say, look, we have this result, can you show me how we got this? Then you can actually do it quickly and easily and accurately. CECL shouldn't be an additional overhead for an institution, provided it's approached correctly. And that's where we see a lot of our partners helping institutions implement CECL successfully where they use spreadsheets. So there are several areas that, or several risks rather, that spreadsheets sort of present that mean that we believe there's a very good opportunity for our partners. Now, first of all, there's going to be extensive use of uncontrolled spreadsheets. A key challenge, as we're all aware, is that spreadsheets are very flexible, they're easy to use, they're all very pervasive. That means, however, from an audit point of view, there are very few controls. So people cannot necessarily see when a cell has been changed, when a formula has been changed, when a macro has been changed in the same way you could with probably a corporate IT application. So there's a risk there for banks implementing CECL. The models behind CECL, and we'll go through those in a moment, are going to rely on external data sources for market risk and so forth. A lot of those are going to come in using spreadsheets, and you won't know necessarily how robust those spreadsheets are or how they're manipulated throughout the CECL process. And again, this gives rise to audit issues and rollback issues that banks need to address. CECL is complex. You'll see how complex in a moment, but it means that a lot of the spreadsheets are going to be tied together. They're going to have integrated workbooks, integrated spreadsheets, going to have multiple formulas, multiple macros. These are going to be very complex implementations and very complex spreadsheets. And one of the dynamics we're finding at the moment is that people are thinking very carefully as to how they're actually going to do it. And spreadsheets will absolutely figure, and now is definitely the time to start raising this issue with your clients, because they will be interested, and we're starting to get more feedback from the market that people are recognizing spreadsheets do matter. The other issue and the other driver to be aware of are the business, reputational, regulatory impacts of errors. This is going to be a big driver. So on the one hand, everything has to be highly controlled so that they minimize the risk of issues in terms of regulations and their reputation. But at the same time, they've actually got to implement it and deliver it on time, ideally on budget too, and it's going to be complicated. And so somehow banks have to address the challenges here. And there's also audit and regulatory risk as well, where you don't want to have to restate your earnings because you found that your CECL results were inaccurate because there's a flaw in the spreadsheet. So these are 5 reasons why we believe that for partners, there is a very good opportunity for helping your clients implement CECL with spreadsheets and control it in the way that they would expect with their standard core IT applications. Now, you'll see where we get this number from, but we believe there are 30 to 35,000 possible conversations to be had in the market. There are lots of people who are interested. We can talk about the personalities and the personas that you should engage with. But with 6,000 institutions, probably 5 or 6 areas in the business where spreadsheets will be critical to CECL, you can see where we think 30,000 conversations comes from. Now, one of the complexities for institutions is that it's a multidiscipline, multi-siloed project, and the whole thing about CECL is going to be end-to-end. So this is going to touch loan origination, it's going to touch risk, it's going to touch regulatory reporting, it's going to touch compliance. And all of these organizations have different systems, different processes, and somehow they have to be aligned, and that's a real challenge for many institutions. And it just adds, as well as the data problems and the data challenges, and data cleansing and calculations and so forth, actually aligning an amorphous, fluid organization to implement CECL is a challenge in and of itself. And again, if spreadsheets figure in that process, there's a lot of value that partners can bring in helping organizations align business process, technology, data, and the need to actually comply with the regulations or with the requirements. So there are, for the uninitiated, there are sort of several issues that need to be borne in mind when implementing CECL. The first stage is to really collect the loan portfolio data that you are going to model in historical, current, and in future perspectives. So that loan portfolio data is going to reside in probably multiple databases and need to be collected, needs to be consolidated. That then needs to be integrated with economic data and default data. We're looking at PDs, LGDs. All of that needs to be brought together. Chances are some of that's going to be external. You may have internal data, but again, where's it coming from? chances are it's going to be in a spreadsheet either totally or partially. Again, that the uncontrolled nature of spreadsheets means that there is a risk with taking that data into the CECL process if it is not effectively controlled. But the loan data and the historical economic and default data is combined to build the historical portfolio model, which is really the foundation for CECL. Once you have that, you can then model that historical model you have in the sort of current environment. It allows you to say, okay, we think that using sort of common data, common model, that the risks are X and Y. You can then evolve that model, implementing a few realistic scenarios that allow you to calculate the future portfolio model, and that's where you start to calculate what the expected losses are on your loan portfolio. Once you have that information, you then can report it. And again, throughout this whole process, in terms of data collection, data consolidation, data modeling, and also the kind of final mile reporting, spreadsheets are very likely to feature. And again, if they're not controlled, if they're not managed in the same way that corporate IT applications are, there's going to be a risk from a CECL perspective. So, as you probably worked out, our belief, and this is reflected in conversations with a range of associations and a range of customers, spreadsheets figure heavily in CECL. And organizations are beginning to work out or wonder how spreadsheets will figure and how they can be controlled. And what I'm going to do now is hand over to Jeremy, who will actually show you how we can help.
Well, great. Thanks, Graham.
Jeremy?
I'm just going to, yep. Thank you, Graham. Good. Good. Well, thank you very much. So this is Jeremy Conde, based in New York. I've worked for ClusterSeven for 8 years and have hopefully a decent depth of knowledge in terms of the market here in the Americas, as well as the ClusterSeven capabilities. So it's my privilege today to bring up to speed in terms of how ClusterSeven's latest developments, capabilities can help you in a consulting advisory capacity, basically build business opportunities using CECL and similar into the banking community. So the first thing to mention is that our technology has really, it's all built in-house. It's taken us 15 years to build really what is the undisputed market leader in spreadsheet and end-user computing governance controls. We've taken that capability that was traditionally offered as a in-house solution behind the firewall. We've now created a cloud, a genuine SaaS-based capability. Why is that important? Because it means that really now it can be deployed across the 6,000 banks that Graham mentioned with tremendous ease, without requiring a lot of IT, obviously, effort. And it can, of course, now be supported and positioned and used within the smallest community bank. Very straightforward. So the ClusterSeven solution, we're calling it CSM, Cloud Spreadsheet Manager, very original. And it's hosted on the Azure cloud. And again, that's important, obviously, with Excel, with Microsoft being the creators of Excel, of course. They not surprisingly have all of the security standards that you would expect. And ClusterSeven ourselves have the required certifications and accreditations around security that, again, we can talk to and provide at a later date. So the important thing is that, again, fully cloud-based, the user at any bank of any size logs into a browser in the traditional SaaS capability, is then able to do a number of things with their files, including, in effect, X-ray them. We call it a risk assessment. It's basically analyzing the file for poor design practices and other potential weaknesses. But more importantly, especially for CECL, it provides the ability to create an audit trail and a rollback feature. So if we move on, the interface, again, is very straightforward. We put a lot of effort into making sure that the user experience is very, very straightforward, very, very easy. So again, it really removes a lot of the training and support requirements. But on the screen you're seeing here, you can basically now, and each one of these rows represents a different version of a spreadsheet. So you can see here that what we're basically allowing the user to do then is to capture each critical version of a file. Now this might be the CECL model, or it might be one of the data sources into the model, or it might be one of the output reporting layers on the back of the model, whichever. You can upload that into the cloud. You get full analysis, which we'll talk about in a minute. But importantly, you get each of those versions stored, and you can then roll back at any time to a prior copy. So in this way, you're getting both the audit trail and the ability to roll back or rebuild data at a prior moment in time. Again, a very important business requirement by both the auditors and regulators. And I think it's true to say that without ClusterSeven, most banks simply will not have that. They will not have any of that capability. So by extension, they will not be meeting the expectations of the auditors, of the regulators. And from our experience, most banks don't know that ClusterSeven exists. So it's not a case of they're objecting to the idea. It's simply the case they simply aren't aware that we exist. So they're not really able to then to use the system. So this is obviously where we're engaging with partners similar to yourself to help build business not only for yourself, but obviously address a critical need with these major financial institutions. Moving forward, when ClusterSeven builds or receives, I should say, the latest version of a file, not only do we basically, in effect, break it into its constituent parts, and this is where we build the audit trail. That was each one of those rows I showed you in the prior slide. What we do in addition to that is we actually look at the results, at the changes that have occurred between this version and the prior version. The prior version may be the one you saved 5 minutes ago. It may be the previous days, the previous weeks, the previous months, previous years. It really doesn't matter. So it's as frequent as the user chooses it to be. But needless to say, we compare the current version with the prior version, and we're basically looking to see if and what has changed, and if there's anything that we ought to bring to the user's attention. So in this particular example here, you can see it's a cloud-based capability, so it's a URL, and the sections on the screen include the ability to understand whether in that area in gray in the middle there, those are the structural items of the file. Has anybody changed macros? Have they changed links? Have they changed data connections? And the area in blue below are changes to the actual underlying spreadsheets. So you can see from this example that really we capture all and every change to every element of the workbook, meaning that, again, the full audit trail is captured, nothing is overlooked, and anything of any substance is brought to the user's attention. Now, for those that are interested, not only the CSM, Cloud Spreadsheet Manager, bring all the capabilities that I mentioned, but an advisor, if you choose, can even potentially white label, have this under your own brand. So you could think of CSM as your own solution. So for those advisors, for example, that you may be in the business of creating templates, spreadsheet-based templates for your clients, whether they're for a CECL or SOX, perhaps for model governance, for taxation, for credit analysis, whatever it is. You can now potentially take the ClusterSeven CSM solution, incorporate your logo into that as well, and then you're basically providing a far richer experience. You're providing not only the template, but now you're providing a solution that will actually provide the audit trail, will detect any unusual changes. So obviously that can be extremely beneficial. If a client of yours was to phone to say the model you provided us a while back no longer functions correctly, instead of you having to scratch your head and wonder what happened, you can go to the audit trail, you can see that someone's changed formulas, macro code, whatever, allowing you then to make the corrections and the client, and you can move forward. So that ability to brand, white label, is again very, very useful and potentially an option for vendors, for consultants. So as far as CECL is concerned, who are the people that you might want to target? Well, the first of all, of course, would be the CECL project team, which typically is in the CFO office. CECL being an audit requirement will roll up to the Chief Financial Officer. Obviously, that means you can be talking about SOX, maybe perhaps even taxation and other such topics. There are many topics you can have with the CFO, but that would obviously be the first area to head. Then, of course, you've got things, senior management, head of change management. CECL obviously represents a profound change to banks' audit requirements. So many banks now are starting to create teams to basically address this, because again, it's not only an important accounting change, it actually can have a dramatic impact on the bank's profitability and performance, impacting shareholder value, impacting profits and bonuses. So again, a lot of people are involved with getting involved with that. Not surprisingly, you've got the compliance teams involved for obviously all good reasons. First line, second line, third line are going to be involved. And then you've got the regulatory reporting managers, op risk. So there are really a lot of people that will be sitting at the table, the CECL table, so to speak. Not all banks, of course, will have these individual roles. So again, this is perhaps an opportunity for advisors to come in and basically act as kind of outsourced versions of these particular roles and responsibilities. So again, it's profoundly important how banks report their losses from this point forward, and many of them will be looking for advice. So moving forward, the opportunity in a nutshell for advisory firms is really in two buckets: additional advisory fees and referral fees. What do I mean by that? So we think about referral opportunities. This is really probably the lowest hanging fruit here, so to speak. In effect, your advisory firm, you find a client, a bank, you may have a banking client already, that maybe you don't feel comfortable enough to actually engage with a detailed conversation around CECL, but you are aware that they use workbooks as part of their operational processes. You can perhaps suggest to them that they consider using ClusterSeven, CSM, as I mentioned, principally for the audit trail and the rollback. Very straightforward conversation, really easy to understand, no complexity, unambiguous, something that you need, something that you don't have. Why don't you talk to ClusterSeven? So that's probably the first one, and obviously for those advisory firms that are willing and able to do so, then we can provide a referral fee. Secondly, you have the opportunity of having a fairly similar conversation, but with other areas that typically depend on critical workbooks. SOX, Sarbanes-Oxley, is again a classic. Many, if not most, if not all, organizations use Excel in one way or the other with financial reporting. It's a very common capability, and something that again can lead to good conversations. Model governance, SR 11, 7, OCC 2011-12. This is again something that's affecting banks of all sizes, and small banks typically will have and will depend on, or will have a lot of models that are built around Excel. Again, you can have a similar conversation as you can stress testing, DFAST, and CCAR. Again, typically something more for the larger banks, especially with the change to Dodd-Frank recently. You've got GDPR, which is the whole private client information requirement. Many banks really aren't aware of where and if their spreadsheets contain private client information. Again, you can use our tools to help unpick that and understand if and when that's the case. So a lot of opportunities to engage with a client and to introduce ClusterSeven and earn a referral fee if that's appropriate. The second area, of course, are more traditional advisory fees. So this is obviously more on a consulting basis. Just to stress, ClusterSeven does not have a consulting arm. We're not in any way competitive in this regard. So this is really an open field for opportunity for your firm. You could, of course, go in, talk about complex spreadsheets, perhaps even refer ClusterSeven as a way to build an audit trail in the short term, and in the same breath, perhaps suggest that the organization, the bank, considers replacing many, if not all, of those spreadsheets with core technologies. Again, you might think that's somewhat counterintuitive to ClusterSeven's business model, but we do actually embrace that idea. And again, you can use our tools to help understand which files connect to which systems. It's a great way to help unpick the different systems and data connections, allowing you to actually then replace files with core technologies. For those files that can't be replaced, they may need to be rebuilt. Maybe the budget doesn't allow the bank to actually entertain replacing spreadsheets, but they are rather fragile perhaps. It allows you to have an opportunity to perhaps come in and rebuild certain files, or maybe even create new templates. Again, knock yourself out, great opportunity, entirely, again, greenfield opportunity. We're not in any way competitive with that. And again, you can use ClusterSeven to create that audit requirement, audit trail around that. You may, in fact, I would suggest probably many banks don't have any policies or procedures around how to use complex and critical spreadsheets, workbooks, and other so-called end-user computing tools. Again, great opportunity to create some standard best practice procedures around how to identify them, how to risk assess them perhaps, which ones may need an audit trail or otherwise. Again, you can incorporate that into a policy perhaps. And lastly, of course, there's training. You know, CECL's new, the workbooks are new. Now we're talking about the need for an audit trail and rollback feature. Using ClusterSeven, great opportunity to be boots on the ground and help train the staff. So I think, again, just to try to help you think this through, what sort of questions might you pose to your contacts at firms? So obviously pretty straightforward. I mean, this isn't really complicated, to be frank. You know, again, all banks are going to be required to implement CECL. Straightforward question, do spreadsheets form any part of the CECL process? Again, not just the core model itself or models. What about the data sources? Where does that model get its data from? Invariably, you'll find spreadsheets there. Where does that model push its information to? Probably a business reporting layer, which invariably can be, again, another workbook. All of those links in the chain comprise the overall CECL process. The whole process needs an audit trail. So it's the fact that they rely on a spreadsheet 3 steps upstream still means they need an audit trail around that one workbook. If it happens to be the entire chain, even more reason for having it. So how's the bank controlling these spreadsheets? Are they controlled like other applications, which typically mean, you know, there's some security, there's some IT responsibility resource looking after those files. In most cases, spreadsheets do not have any sorts of controls or oversight. The user who developed them is the person who uses it. Obviously, if they leave, it often leaves a major hole, but there are typically no controls, no visibility, no audit trail. And again, this is something that's important. And to be frank, many banks are sort of focused on day-to-day issues. They're not really thinking about this. This is often new information. They haven't thought it through. And here you can come in with a turnkey solution. You're good to go. And again, just to kind of double down on this, you know, again, how can you ensure that these files have that audit trail that's required? If they're doing anything, they've probably set up an extra tab in a workbook, and they've asked the user to write down each time they make a critical change, which from our 15 years of experience has proven never to work. So we can almost give you a gold-plated guarantee that that's a complete waste of time. You really need an automated tool to give you that audit trail you require. So it's very straightforward. It's a very easy conversation to have with a client. Everybody has a dependence. Every bank has a dependency on critical spreadsheets from our experience. it's very straightforward to unearth opportunities in the space. Well, I hope you found that useful and informative. I'm going to pass the mic back to Joe now, my colleague in Boston, and we'd love to entertain any questions you may have. And I know this is a webinar. If you haven't done so already, you're welcome to send us questions in the chat window on the webinar pane on the right-hand side, and we'll certainly use those and hopefully help to answer your questions. Thank you very much.
Thanks,
Joe?
Jeremy. We actually did have a couple of questions come in from the audience as you were presenting. So going down the list here, first question is, what sort of practical steps should a company consider when preparing for CECL?
Well, good question, Joe. I mean, the practical steps I would say is, given that this is new, this is obviously something that's affecting all banks. This is actually, from a timing standpoint, due to take effect the end of next year, 2019. So there's an 18-month runway leading up to that. But this is actually quite a substantial change. So I think the important thing, again, there are a lot of components, elements to CECL. We're not trying to boil the ocean here and answer every single aspect of that. But I think that certainly for this opportunity, the easiest question to ask is, do you have spreadsheets part of your CECL process? And I think Graham already mentioned at the beginning there are 6,000 banks. There are at least 5, if not more, different question types that you could ask in terms of where these files exist, the type of processes that they support, the type of risks that these files could present, reputational and financial risks. So there are thousands, tens of thousands of permutations of questions that can be asked to all these banks. So again, we would suggest don't overcomplicate it. Dig a bit deeper. ClusterSeven, as I said, we don't have a consulting arm, but we do very much enjoy partnering with consultants. And we would suggest, again, engaging with us. If you have a specific opportunity, we'd be delighted to kind of brainstorm around where we think you could add value, but it's pretty straightforward. And certainly from our experience, once you've had 1 or 2 conversations with banks, you know where these files are, you know whether there's an audit trail. Do they have any tools that allow that audit trail to be built correctly and efficiently and completely? And given all those answers, where you, the advisor, can potentially pose added services from your organization to actually help the process, as we touched on, training, replacing, rebuilding, et cetera, et cetera. So again, that's I think what I would suggest.
Excellent. And a second question here, Jeremy, which I think you may have already partially answered already, is when are banks expected to be in compliance with CECL, and what would be a reasonable time frame to start preparedness for that?
Yeah, so that's a good question. So as I said, most banks are expected to do this. I think if you're filing GAAP financial statements, so you're kind of subject to SOX, then it's end of 2019. Smaller banks and unlisted entities, it's a little bit, few months later, 6 months or so later down the road. But given that this is such a profound change to the way losses are recognized, and given that this has can have such a dramatic impact on a bank's earnings, its share price, potential reputational damage if mistakes are made, I think every advisor in this area would suggest that by now banks should have, they should be already with draft systems. They should have test methodologies in place. They ought to be doing dry runs, so on and so on. But the truth is, a lot of banks have not yet started. So again, there's a bit of a time crunch here. This can only put more, pressure and anxiety on the bank themselves. Potentially creates even more opportunity for the consultants, advisors to come in and help, with extra resources to get them over that finishing line.
Great. And the final question I have that came in is, what type of support does ClusterSeven offer to their partners?
Well, that's a great question. So Yes, we actually offer a lot of support. We actually have a partner channel manager, which I think is a good example of how seriously we take ClusterSeven's support and engagement with advisors and similar. So we do not have a competitive consulting arm ourselves. We're purely and simply a software vendor. And yet we do obviously have a lot of insight, a lot of experience with working alongside other banks, hearing how the auditors, how the regulators have questioned them, how they've reviewed their control processes, what their opinion is of the use of spreadsheets and similar. So we have an active dialogue. We invite advisors to engage with us to sort of discuss and kind of bring themselves up the curve as far as understanding the situation, and we would encourage consultants to give us a call and to discuss any particular challenge or issue. And once you've done one or two, as I've mentioned, we feel you'll be able to basically rinse and repeat that many times over.
Great. Well, that kind of wraps it up for the questions that came in. So unless there's anything else from anyone on the line right now, we want to thank you once again for your time this afternoon and hope you found this information to be helpful and useful. And if you do have any additional questions or requests for further information, you see both Jeremy as well as my email contact information there. As Jeremy mentioned, we'd be more than happy to provide you with further information or assistance that you may need. So with that being said, thank you again for your time, and we look forward to the opportunity of maybe speaking with you soon.